Hey everybody, welcome to the Real Estate Show. Jason Mancuso here, and joined today again by Stephanie Travato. Second time, right?
Yeah, second
Love it,
time.
love it, love it, love it. How you been?
Good. Busy out there.
Yeah, good, 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 good.
Yeah.
We touched on it last episode with Derek Schluter. Talked about the eviction moratorium for investors out there. Today we want to continue the investment property conversation, and really, I think we were talking about this. I think it's a good I don't know, like how we got here, right? In
Right.
terms of you've been you've been selling homes to clients that they live in, and now they're calling you asking you about investment
Right.
properties
Right.
and real estate investing. So it's kind of a good I don't know. I feel like I'm not saying this in a bad way at all, but everybody's got the itch in a way, right? I think everybody out there understands that real estate investing is a primary, in a way, resource or means to the wealth that you're going to create for yourself over a lifetime. And I think whatever the stat is, but you look at all the billionaires in the world, most of them are,
Real
a
estate.
lot of real estate
Yeah.
wealth to get to that point. Generally speaking, we're not talking with a lot of billionaires. Even down to little old Rochester, New York, it's just a conversation around, okay, your net worth, right?
Right.
And if you're, meeting with your financial advisor, I think they would, one of the concepts in play for them is diversification, right? So, I think with that comes concept wise, just not putting all your eggs into one basket.
Right.
And, that financial advisor field is hey, you don't want to put everything into the stock market. You want to have, stocks and mutual funds and bonds, and treasuries and, cash. And, then comes real estate.
Right.
Or not then, but just real estate's another. It should be looked at as you got your 401k, you got your IRA. Real estate investments, frankly, should be part of that. I think if you're focused on creating wealth
Right.
for yourself as an individual, right?
That portfolio income is a great stream to
Absolutely.
have coming in.
Absolutely. And even not to go too far off the deep end with this, but there's ways to go about this where you can invest in real estate through your financial advisor and not have to be an active investor with going and changing light bulbs or painting an apartment once it's vacant, locally wherever you live.
Exactly.
Right. So there's that's not so much our expertise in terms of being a financial advisor, obviously, but there's just different ways to go about it, and that diversification concept, it goes hand in hand with using real estate as a means to build wealth. So we wanted to talk today, just kind of a quick crash course of sorts to different types of real estate investments and some of the things to know and things like
Yeah.
that. So
It seems like a lot of people right now are interested in the multifamily, whether it's duplex, triplex, getting in there and renting out one side or one unit and occupying the other, or renting everything out and making that stream of income.
So that's a good point in terms of we get a lot of inquiries and a lot of first time buyers especially. They have that, it's almost like that entrepreneurial mindset type of thing, right? But they're applying it to home ownership and just the roof over their head and just having to live somewhere, right?
Right.
In terms of okay, I want to buy a house. I know the first house I buy isn't going to be my forever home. I also want to invest in real estate long term. Why don't I buy a multi-unit
Right.
and live in one side, rent the other side? Generally speaking, especially with the prices in our market, you can essentially live for free a lot of times. But if not, then you're living on the cheap, right? I mean, you may end up being $200-300 a month, with your when that unit or other units are filled and paying the rent to go towards your mortgage.
It's a great opportunity.
and then you got something that you consider keeping long term. I think that's you know,
Right.
for most, that's the goal of doing that. Is like, okay, this is the start, and then there's going to be the jump off to, you know,
Right.
settling down in life, get to, you know, get married or whatever the case is, and moving
on.
into the single family home, you know, wherever it is, type of thing, and moving on from you know, apartment style living, I guess.
Yeah.
But that's, I wish I did it.
I know, me too.
You know, because it's just, there's such an opportunity for it, and you know, I think you either gotta either sacrifice or, you know, just be okay with, like, call it apartment style living, whatever you want, but essentially, you know, shared walls, right? So
Yeah.
you're gonna want to get along with your tenants on the other side, and I don't know, generally speaking, I feel like tenant situation, if they know the owner of the home is living on the other side of them, they're, you know, there may be less,
Well-behaved.
yeah, less problems.
Right.
So that's good. I mean, that, you know, then from there, you got this asset, and so you lived there 5 years. Now you're paying down your mortgage a little bit. You know, hopefully the market continues to appreciate for you to your advantage, and you're building equity. And now you've got the opportunity. Okay, on to the next. I've got my first investment property solidified. I just happen to live in it to start off.
Right.
So,
Yeah.
and keep in mind, you can do this with, you know, if you're financing an investment property strictly as an investment, you're typically 20% down payment in order to make it happen.
Right.
There's some banks out there, actually, as a caveat, for a single family home, they could do 15%, but for the most part, 20, even 25% down payment is a requirement. If you're going to own or occupy that home starting off, you can get into it with an FHA loan, minimum 3.5% down payment, or, you know, even a conventional loan product, which is actually, not to get too nitty gritty, you'd really want to try to do that, because then the PMI would go away at 20% equity versus FHA. But, you know, 3-5% for conventional loan down payments.
That's awesome.
Right. So that's, and then touch on multifamilies just outside of that owner occupant aspect. I just rambled on about that a bunch. What are you seeing from people that just, you know, want to invest in multifamilies, generally speaking?
So I have a couple clients that are either out of the area or out of state that are looking to buy a property in Rochester. You know, and whether it's month to month or, you know, the lease is
Yeah.
a year lease, they're just, you know, ready to jump in, whatever it is. And either when the lease runs out, they have people in mind that they would like to fill the gap with, or they're just looking to build that wealth and
Yeah.
make
Me-
it their own.
You're getting a lot of people that are in that, you know, like you said, wealth building stage in life, I guess, right? Where
Yeah.
you're thinking about real estate.
Right.
Yeah, that's great. And I think, you know, multifamily investments, you know, the attraction is more units, right? And
Yeah.
when it's fully occupied, whether it's 2 or more, I mean, you can get, you know, there's big properties out there with 50 units
Right.
under one roof, right? Like, that's more, you know, that's obviously a bigger ball game, so to speak. But, you know, 2 units generating rental income per month, or 3 units, or 4, or whatever, is, you know, an attractive grab for investors, right? So, and there's, you know, the benefit can be too, to where, like, if you have one vacancy but the other's filled, well,
Right.
you're still collecting rent on the one.
Yeah, you're always going to have that stream coming in, and kind of like you said earlier with, you know, there's always going to be real estate wealth coming in versus Social Security. We don't really know
That's a
down
good
the
point.
road what that's going to look like. So for
Yeah. Yep.
any generation, it's great to get in and start to build your real estate portfolio.
Absolutely. Generally speaking, the people that you've been talking to, and just as, like, you know, kind of general snapshot, just kind of a feel for it, do most people look to want to manage it themselves, or are they more looking to hire a property manager?
No, so I think that's one thing that's great to touch on is many people don't really understand that you don't have to be there managing it yourself. So that's something I always mention right away is you can hire a property manager to go in and
Do everything.
do everything for the tenants, especially if it's 2 a.m. You're not
Yep.
running down to your property. So it's great to know that. And my clients are not looking to run their own. So
Yeah, and I think, not to say it's smart, right? Because, I mean, there's flip side to everything. But yeah, I think from a peace of mind standpoint, unless you're like really committed, just hire the property manager.
right,
Right.
it's
Now-
worth it.
Interview, vet, make sure that you're getting with somebody that you trust. But you just, again, peace of mind. Like, they're handling the calls, they're collecting the rent, they're chasing the rent when it's not,
Right,
brought in on time. They'll handle things like evictions for you with an attorney. They'll handle the maintenance.
Right.
Don't get me wrong, you're gonna get the bills. If faucet breaks or furnace needs to be replaced, it's not like it just comes out of the property manager's pocket,
Yeah.
but you're paying for it anyway. So I mean,
Exactly.
I guess there's a lot of people out there that can do things more cost effective than a property manager would. And I get that side of it, right? You just got to understand, like, the world that you're getting into. And yeah, I mean, like you said, 2 o'clock in the morning, the phone rings because there's no heat, or there's a flood because the plumbing,
yeah,
pipe broke or whatever. Like,
I can't wait.
yeah, you better get out there.
Yeah,
So yeah, that's a good thing to touch on. And look at, generally speaking, not to speak for all the property managers out there, but you're talking 10% is kind of the industry standard as far as a fee for what they do. And again, furnace breaks or whatever other maintenance is required that goes on top of it. But 10% of your rent. So if you're collecting $1,000 a month, is it worth $100 per month for you to not have to deal with everything?
oh yeah,
Beauty is in the
Right.
eye of the beholder, I guess. But I
Yeah.
think it's something that should at least be considered, and run your numbers accordingly if you're gonna go that route.
exactly. Especially if you're out of the area or
Yeah,
half an hour away.
I mean, geez, just being out of town, and we work with a lot of out of town landlords and investors, and even out of the country too. Like, you just have to have a property manager. You can't get away with being out of town and managing a property. Even if it's half an hour. I mean, half an hour, okay, fine. But like, if you're in Buffalo and you got property in Rochester, like,
Right.
you're gonna spend that
It's
money.
tough.
You're gonna spend that money in gas.
Yeah,
at this
true.
point. So,
Right.
stuff to think about. Now, again, we're going on a deep dive here, but like, there's people that do this for a living, where their job is to manage their properties, and okay, I get it, different story.
Yeah.
Right. So yeah, I think the multifamily aspect and property type is fairly obvious in terms of the attraction to it. Just more units, more rent. Keep in mind, higher expenses could be involved. Especially, in the city of Rochester, like, you get over a certain threshold of number of units, you're taxed differently. Like for 1 to 3 family, 1 to 3 family, trash is included in the taxes. 4 and above, you now have to pay for trash separately.
More expense.
Yep. Water bills always going to be paid by the landlord. That's going to go up, per unit. So, and this is all okay, just as long as you're running the numbers on the, investment performance potentially, taking that into account. So just, there's a up and a downside, I guess, to everything, right?
Right.
About single family homes, you having investors look for those? What is it?
I am. So mainly investors that are looking to buy them cheap and then flip them
Okay.
to resell them.
Yep.
So not really looking for people to rent them out right away, but mainly just to gain some income by updating it and putting it back on the market.
Yeah, I think that's a go-to for that, for a single family home segment. I think if you're just to take the investment picture as a whole, or conversation as a whole, And, we just talked about multifamilies and that being like, fairly obvious in terms of
Right.
the income potential. Flip side of the coin, the single family market, somewhat becomes fairly obvious too in terms of like, okay, especially with the way the real estate market is right now,
Right.
okay, I can renovate this house and sell it to an owner occupant buyer who's going to pay top dollar,
Right.
you know,
Especially
and
if
looking
it's,
at the profit from that, right?
yeah, prime location, and
Exactly.
they can see what the houses are going for in the area.
Yeah.
So,
This is where we don't need to dive into the specifics because, frankly, we're not accountants. But get with an accountant, get with a financial advisor before you just start flipping homes. There's capital gains, because this is all happening in the short term. Generally speaking, from an accounting perspective, with real estate, if you're seeing gains in the short term on an investment, I get this question all the time in terms of your owner occupant house. That's a different story. But if you're just doing a flip, make sure you're aware of the tax implications of it. And, outside of the accounting conversation, like, make sure you know what you're doing.
right. Liability.
Well, that and just from the renovation side of it, that you got the budget set before you buy this house for 50 and you're planning on putting 50 into it
Right.
and you want it to sell for 150. There's a model for that. Make sure that 50 budget that you're going to put into it is solid.
Right.
If anything, over conservative, because you're budgeting based on what you see when you're making the decision. You start tearing down walls and stuff,
Right. Could be a whole new ball game.
right? And now all of a sudden 50 turned into 70. So now you're only 30,000 in profit in theory.
Right.
You start subtracting holding costs and expenses for the sale. It might not be as lucrative as it seems.
Right.
And then you get into that accounting conversation. Now, before you know it, if you don't know what you're doing, you may have worked 6 months on a thing day in and day out, and you made,
Right.
$5,000 profit. Is it worth it? Not saying that $5,000 isn't a lot of money, right? But
That's a lot of work, though.
for the time that you spent, it may not be, right?
Right.
So just make sure you're conservative with what you're kind of financially planning for, right? On a flip.
Right.
Frankly, I think there's a lot of upside to the single family rental market. Now, price point and location matters obviously because, you just buying a single family home in the suburbs, with a higher price point, higher taxes,
Right.
the returns aren't going to be as great. And especially when you're comparing to like multi-unit stuff that we've talked about, right? But to me, I think, one of the upside factors to consider with single families is you have a better chance anyway at longer tenancy
Right.
because they're in a standalone home. There's not the neighbor that they don't get along to, that they're attached to and sharing a driveway with, and they're playing loud music at night, and
Yeah.
that person's trying to sleep, get to work, and that sort of thing, and you just end up kind of having more turnover built in with multifamilies than you do single families. I think generally speaking, everything's situational, but
Right.
and then also in the market that we're in too, like you have the opportunity anytime there is a vacancy. You can reassess you can do this with any property, but especially in a single family in a strong seller's market, you can look at it and say, okay, what would this sell to an owner occupant buyer with the way the market is right now? Maybe it makes sense to cash out.
Right.
So, food for thought there.
Yeah.
Talk to me about Airbnbs.
So we're definitely seeing a lot more Airbnbs pop up. It's another great stream of income. I was just speaking with someone this morning that he bought a house on Canisius Lake and his family uses it in the summer for a couple weeks and then they rent it out throughout the rest of the year. He also has a property manager that goes down and cleans it and makes sure that everything's good before the next
Yeah.
party comes through. So that's another great stream of income.
Yeah.
So,
Kind of like I don't think it's going anywhere necessarily, but I think it's kind of become a hot topic in the last few years.
Yeah.
You know, especially like the last couple of years, you know, COVID wise, like people
Right.
working from home, working remotely, like
Right.
there's a lot of, you know, short-term rentals that have turned into longer-term rentals just because they
Yeah.
love it there and they want to stay and I'll take another month.
Yeah.
Right? Type of thing. So yeah,
Right.
I think that market has come on the scene pretty quickly.
Yes, it has.
More common with single families than other property types. And you know, location is a big factor there, right?
Right.
Like, you know, I think, don't get me wrong, there's always need for short-term rentals, especially with this being trending now in terms of, it's almost like, is there equal search power, so to speak, to like hotels versus Airbnbs?
Right.
Right. So it's kind of interesting how that industry has evolved too with this.
Yeah.
But I think generally speaking, like you mentioned, the lakefront house, or you know, seeing a lot of like, especially in our market where you can get into the southern tier areas, and there's, you know, just some cool properties with a lot of woods and like a
Right.
pond and stuff, and like it's cool for like a good weekend
Yeah.
getaway or
Right.
you know, vacation. You know.
Going skiing.
Yeah, in the woods. Yeah, for
Yeah.
skiing especially. Yeah.
Right.
So you know, there's more and more properties that are being sold with that intention than ever before because of this Airbnb concept. Because it used to be that property right in the woods with a pond. It was like, okay, we got to find a unique buyer that
Exactly, that
wants
likes
that
the
land and
pond.
wants to secluded and that sort of
Yeah.
thing. Now it's like, you know, now you opened up the market to all these investors out there too that,
Yeah.
you know, don't necessarily care to go there all the time.
Right.
That's
Right.
huge.
Yeah, I don't think that's going to slow down anytime soon.
Doesn't seem like it.
No.
It doesn't seem like it. It seems like it's pretty hot on the trail. And then you also got like the personal benefit side to it too, right?
Yeah.
Where it's like, you know, like you in that example, like, yeah, my family vacations there every summer for 2
Yeah.
weeks, and then we rent the rest of it, and
Pays for itself and then
pays
some.
for itself and then some. Yeah, and
Yeah.
even I think, you know, because you know that example of the lakefront property probably has a pretty good price point and probably has pretty high taxes, right?
Right.
But you may not be making a ton of cash flow on that type of investment, but it's there for personal use.
Right.
And, you know, I would assume it's a long-term play too, to where it's like something like, hey, we're going to hand this down to our grandkid or kids one
Yeah.
day, and the grandkids can use it, and that sort of thing. And,
Make
you
more
know,
memories.
yeah, and, you know, you get into it now for whatever, $500,000, something lakefront, could be, you know, and who knows what it's worth 10, 20 years from now,
Exactly.
right? I think, you
Yeah.
know, the gamble is that sort of thing doesn't go away, and only goes up in value over
Right.
the long term. So
Yeah.
cool. That's a good one that, you know, again, is somewhat newer on the scene.
It is.
Used to be untraditional, now kind of like getting into that traditional type of investment.
Right.
And that's literally over the past 2-3 years at most.
Yeah.
So
We're actually staying in one for our honeymoon.
Yeah?
Because we're going to Lake George, and I hopped right on because I said I don't want to stay in a hotel, so
Sure.
we have one that looks nice and cabiny. So
Well, I think especially with a market like that, right? Like, yeah, you would rather have your own place,
Right.
a little seclusion, and you got, you know, still you're nearby the amenities. You've
Right.
got, you know, the appeal of that sort of destination, right?
Right, yeah.
All in your backyard versus, you know,
right.
don't get me wrong, it's not that there's anything wrong with hotels, right? It's just a
Yeah.
different way of life, I think, that's
It sure
evolving right in front of our eyes. Mm-hmm. That's cool.
is. Yeah.
Real quick, we'll touch on commercial investments.
Yeah, so commercial investments, what I've seen is they're great if they're rented out, whether it be a salon or an office space. But if they decide they need to move out or they go out of business, then
Yeah.
you're not getting that one good stream of income anymore. So then
Yeah.
you're stuck footing all the bills for that.
Yeah, and it's, yeah, I guess similar conversation in terms of current with the times. You know, just that commercial market, you know, especially here in Rochester, where, you know, it's not like we had a big thriving commercial, you know, office space market, for example, prior to COVID, but Now with how things have changed in terms of remote work being common, office space being downsized with big companies, and just the way of the world changing, like, yeah, it's
Right.
tough. It's tough. Now, I almost kind of, if you're a commercial real estate investor, I think you're probably into it for the long term. Okay, so there's always that conversation in terms of what does the Rochester, New York market look like 30 years from now, and if you're the owner of whatever skyscraper downtown, like I guess the intent is that it's the development is there to where things are different than what they are downtown now, right? And then generally speaking, real estate 101, I guess, right? But
Right.
office space, for example, yeah, I mean it's there's been a lot of pivots that have happened in that field too. Like there's, I think, more common now than 10, 20 years ago is like individual office rentals, or smaller spaces for, smaller rental per month or less, are common compared to where it's just, the old school type of, company, whether big or small, and then just have their building or their space in an office building, and that's what takes up the majority of it.
Yeah.
There's just, I don't mean to be negative around the commercial real estate market. You just got a lot of factors right now that are tough to, really lead to a strong positive situation. It's not to say that the commercial real estate market is dead. It's not. But you just got the restaurant industry, just business industry in general, with a lot of things in flux right now, and coming out of hopefully this pandemic, hopefully things get back to normal in that front. But definitely the last 2 years has caused some change there.
Yeah, for sure.
Again, higher expenses just because different tax rates, different. It's just a whole different
Utilities.
set of circumstances that you have to budget for.
Right.
Now you're looking at commercial HVAC and not just a regular
Yeah.
old furnace, right? Like
Exactly.
these are big time dollars in comparison to some residential unit. So,
Yeah.
stuff to account for, insurance, that sort of stuff too. So.
Yeah.
But, not to say that it's a bad investment, especially with long-term aspects, or if you're a business owner operating your business out of a building that you own, that's where I think it really makes sense.
Yeah.
Right. To own your place of business versus paying rent for it
Right.
can have advantages for sure.
Definitely.
What do we miss?
Mixed use properties where you might have a business or
Yeah.
restaurant on the first level and then apartments on the
Yep.
top. So then you'd have 3 streams of income or however many
Mm-hmm.
units you have. So,
Yep. There's a lot of that too. Especially, we don't have a ton of they're called lifestyle centers that you see in Florida or other bigger, more kinder to weather markets, I
Yeah.
guess, where there's a lot of incoming new apartments that are, posh and trendy, and you got the Whole Foods is in there, and there's a movie theater and all sorts of retail stuff on the first floor, like you said. Those types of developments haven't really hit here in Rochester too much, but more of a national thing. Of similar nature, not necessarily the same concept, but there's a lot of mixed-use buildings in the city, especially where there's whatever business on the first floor and a storefront, whether it's kind of convenience store, barber shop, whatever it is, and then you got a couple apartments above it. If anything, it can be a good hedge too, because you have a commercial
Right.
asset. There's benefits to that financially. You got the stable apartment rental income, and the storefront hopefully remains stable. But if it turns over, if business fails or whatever the example is, it's a lot easier to rent an apartment. So that kind of carries you through things. So
yeah, for sure.
cool. Cool. This was good. I think this was a good like crash course on just different property types and some snippets for each.
Yeah, what's going on out there, and
But again, like we started, I mean, real estate as a means to wealth is definitely a thing. Mm-hmm. Don't shy
For
away
sure.
from it when you're ready.
yeah, we're definitely looking. So
There you go. Good. Cool. Stephanie Travato, thanks for joining.
thank you.
Catch you on the next one.
Yep.
Thanks for tuning in, everybody.